What's up, guys? Welcome back. Today was a good one. Today was a good day to be a supply and demand day trader, especially like if you know what you're doing. I'm only a couple months in and only really a couple weeks using supply and demand. And today just presented itself with a ton of different lessons. I learned a couple things. I made 3 trades today. I'll show you each one of those trades that I made and the lessons that I learned from each one. Like I said, this is completely a learning process, and I'm also open to feedback. If you're using supply and demand, I would love to get your feedback on any mistakes I made, any ways I can fine tune them. Like I said, I kind of want to learn this process together. Right now, my portfolio is about $5,000. It's about to lose 3,000. I'll explain that in a future video. But about $5,000, and I'm trying to just, have some fun with this. This is a hobby for me. If we look at the ES, I am charting off the ES, all right, and which is the futures, E-minis, and then I am going to be trading with SPY contracts, just liquidity, different days to expiration, gives me a couple more options and things like that. And like I said, this is all going to be done with options. I'm not doing them with shares. This is kind of what we've been looking at. This is the 5-minute chart going back to March 3rd, which was Thursday. And we can see along the way, I've just created a bunch of demand zones on different time frames. If you want to see how I did that, I posted a video on how I write them. I will definitely link them, and you can join me on Sunday nights where we go through live and do a bunch of different stocks. But I think the most relevant one is right here. And this was pretty much at the end of Friday. And we can see after Friday, we kind of jumped down to the 6th where we had a little bit of a gap to fill even up to supply. So I was really watching that, A, to see if we could fill the gap, and then B, what would happen because this supply had never been tested. Throughout the entire weekend, if we look, and I'll kind of zoom in, you can kind of see where I mark some of my entries and my exits. I had this demand level already drawn, and that was drawn from back in February 25th. So that's where that demand zone was drawn, and I just have it highlighted in white because I knew that that was going to be something key for me. But what we saw into March 7th, 4:45 in the morning. So that was essentially early Monday morning. We saw this thing kind of just bouncing around, nothing really crazy happening. But then we saw a demand form, and this is the 5-minute chart. If I go back, I think I formed it out of the 15-minute, but I don't want to just confuse you guys with jumping around. Like I said, it was either the 15-minute or maybe even the 30-minute that I made a nice little demand zone. All right, and that formed that demand, which made things even more interesting going into today. Now, these dotted lines that are all over here, guys, this is just pretty much for the video. Most of these are not going to be up, or I'm putting them in intraday, all right? So this white dotted line was from a previous supply that had kind of become invalidated. It was a really big supply, especially after I was focusing on this, but I still wanted this to be relevant. And I also saw that that became even more relevant when we had a little bit of bounce at about 7:30 in the morning off of what used to be that supply zone. And then we see it tested this level right here, and then it continued upwards. So right now I'm looking at, this is pretty much coming into the market open. Now and so here's the lessons learned. I generally never trade in the first half hour, mostly because of extreme volatility in the morning. And I'm new to this and I don't want to get smoked on that volatility. But watching this clean rally into supply, I'm like, this is kind of the setup that I'm looking for even during the day. So if I see it, I can maybe be a little bit more conservative, scale back my position, right? Maybe if I go in for a couple contracts, maybe I'll shrink my contract size because of that early morning volatility. But I definitely wanted to watch this. And then at 9:05, about a half hour before the market opened, it entered that supply, and then it immediately bounced off. And I saw it kind of bounce off this way, and I'm like, oh man, we missed it, and it's going to kind of fall down here, and I'm going to miss this move. But it went back up and tested it again. And then on the third candle, these are 5-minute candles, it would not break this 43.25. And I said to myself, in the market opens, if we pull out of this supply zone, which I have a really tight supply zone, which allows me to keep a very, very small stop, a very, very small risk, right? If we enter close to our stop, obviously our stop risk is going to be less. So I was watching this, and as soon as it broke down, as soon as this candle closed and it continued on the downward, I said, if it breaks the low of this little hammer candle right here, if it breaks that, that's going to be a good enough entry for me. So I have it marked entry, and my stop would be pretty much at the market open. This was a 9-point risk for me, and I knew that I was targeting kind of this zone right here. All right, this was also a key level built back. It got touched here, it goes all the way back into here where this was the top of a former demand zone. So I kind of wanted to watch it. Acted as demand there, and then it acted as a little bit of support here. So this was kind of going to be my my target. All right. If I was holding many contracts, this would have been a great place for me to maybe scale down my position and hold it. But essentially, I got in for I got in right as it entered this candle. I got in for SPY. I'm using expirations that are next week. All right. So here's the thing kind of with expiration for me. Today's the beginning of the week. There's Monday, Wednesday, Friday, and I kind of consider Friday and Monday the same. I know a lot of people could go early, like 0 DTE if you're looking to scalp, because this is kind of like a scalp move. But I would rather get less return and have less volatility in my option while I'm still learning. So I'm usually going to go about 3 to 5 days out with my expiration. And like I said, also too, this is right when the market opened, right? This is 5:10, this is 15 minutes. We're not even at 9:40 yet. So that's another reason why I pulled it out, because I knew that this could snap right back. And I was really afraid of it coming down, hitting this level, and then bouncing right back up and me losing everything that I had earned from a pretty nice setup. And I was okay there. And in hindsight, like even if I was like had balls of steel, like if you held all the way down to here, you have balls of steel, you know, but I look at all the times in hindsight, it's always going to be 2020. Even if I would have stayed in, when this would have pushed, when this wick would have pushed, I probably would have been like, no, I'm out of here. I would have looked back here and been like, I'm out. Then another green candle after that. And then like, even if I made another big push, so now we're seeing like some higher highs, there's no way I would have kept my position through here. I don't have the experience yet, and I don't have the nerve yet. But if you did, you cleaned up. And I'll show you some of the percentages that you could have made in options plays. The options plays that I bought, I think in the neighborhood of 120, 130% you could have made if you entered around the same time as me and you were able to hold all the way down into this demand. Now here's the lesson that I learned today. This was probably like, that should have been it for me, right? This was a 10% trade for me. I think 9.75, and I was done by 9:40 in the morning. That should have been it as a hobby trader. But I saw this, I just got FOMO, and I said, I generally won't play like out of the bottom. Like if I would have played this all into demand, I probably wouldn't have played a bounce right to the upside. I'd kind of like let things settle and kind of get back into it. But I'd been out for a long time just watching it come down, and sellers had control all day. So I looked to enter my next position on a possible bounce out of demand. And this red dotted line I drew after the fact because it is something that I should have looked back on and saw that it was kind of like a level I probably should have broke through before I entered. And guys, this was frankly just a FOMO trade for me. It kind of like, just because things enter and come out of demand, and that's the lesson, like doesn't mean you need to get in. You know, we're not just buying calls because it comes out of demand, and we're not just buying puts because it comes out of supply. We have to make sure that these things make sense to us. I knew once again, it was a little FOMO. I was up on the day. Maybe took a little risk, but this trade, even though I did make, I think $25 on this trade, I probably shouldn't have even entered it. I probably should have just been an observer at this point, but after watching it fall, I was like, okay, it fell all this way. Let's see if we can make a bounce. So I said to myself, if we get another green candle in a row, we had a little bit of a basing period. If we can come out of this demand, I'm probably going to enter, and I'll have a nice tight stop. Once again, this is a level of 42.62 down to 42.54, so about an 8-point spin, and I was watching to see if it would probably come up to here. Once again, this was going to be my target back on the upside to act as some resistance and maybe get a bounce. But really, once I got in and I started looking back and I said, Brad, this is FOMO, you need to get out. And that's really what I did. And I think this red candle here really helped me get out. I mean, if I would have got stuck for maybe one more candle, I don't know. But this was definitely a FOMO trade. I'm not mad at myself. Like I said, I'm happy that I recognized that it was a FOMO trade. And it did have a kind of nice setup. It had a good stop, defined stop. But like I said, I got out of it. And it turns out in hindsight, that was a good move. It was just a little bit of a continuation, a little bit of a test. And then it came and flushed back down. But I got out of this trade for another like $20, 5% or something silly like that. But guys, don't have the FOMO. Because I'm new to this, I'm so excited to see things coming out of demand, see things coming out of supply. we can see how this was a much better setup. It was a much better rally in, and then it had much more pressure, much more downward pressure. Here, volume is on the way down. Like, just it did not have a good setup. This had all of the things for a right setup, good price, also good volume. Down here, not so much, especially when there was nothing really to indicate that the markets were going to flip and go long. The NQ was down, right? The NAS was down, the SPY was down. There was really no reason to necessarily be going long with calls today. And I kind of realized that at this point. Did it stop me? No, because like I said, I am new to this and I'm pretty excited. So what we saw was it continued to sell off, guys, and it's just been cutting through all these demand zones. It got down into this demand zone here, and this was the part where I looked back, okay? And I know the people that teach this, I know if Carmine Rosado saw this, this is like probably a typical noob mistake of trading on FOMO, looking back and saying, man, I could have made all this money. It's going to continue to do that all day. And that's really what I thought here, okay? And this is really what happened with this trade. It cut through, came down, and I figured it was going to consolidate like it's been doing all day, and then it was going to continue to flush to the downside. I guess in hindsight, like, let's look at the pros and the cons. Once again, I was up about 8 or 9% on the day. So was this a little bit of a stab, a little bit of a gamble? Yes. I think this was gambling. I traded on what I thought was going to happen, not by what the market was telling me. This last one was a gamble, right? The middle one was a little bit of FOMO. The first one was a great setup early in the morning. But then as I'm sitting on my computer all day, I went from great trade, great setup to what the market was telling me, let's trade the chart, into a FOMO trade, into a trade that was what I thought it was going to do. And that's the one I lost. And luckily, I didn't lose on it that badly. I said to myself, if we can get up here, I watched these two candles. I said, if we have another low, I'm going to get in. And it's hit that low, and right as I entered, it snapped back to here. So it was pushing. I was like, all right, here it comes. I entered. It snapped back up. We had another pretty much basing candle, and I put my stop right at the top of this wick, and then in the next minute or so, it stopped out, and I lost about $40 on this because I entered. I really entered down here, right? Once it broke below this body, that's where I entered. Once it broke below this wick. So my loss was really not from here to here. My loss was really 42.25.50 all the way up to 43.35.90. So that was about a 10-point loss. And in all of these, guys, I had targets, right? I had this. This was it, and I had a target. Great setup. This, I had an idea with kind of a target. Here, I didn't have a target. Right, I had to stop, but I was like, where is this going to flush down to? Down to this demand? Is it going to is the ES really going to sell off that far? Right? Are we going to have a move? And I can't say it's not going to happen, but I said it kind of did. But what I thought was like, was it going to go all the way down? And it was just a bad trade. Now, hindsight, once again, it chopped around here for a while, got to the end of the day, and then it did come down into this demand, which makes for a great tomorrow. But I'm not mad at myself because I did learn the lesson, and that's kind of why I'm making these recap videos. This is kind of like my video journey, a journal. I will look back. But I think if you're new to this, be happy with one good trade. Don't worry about the money. I'm looking at this chart. I'm not looking at my P&L. I'm not watching it go up and down. So I had no idea how much I was up when I exited this. I really had no idea. And I think that's good, but you need to be okay with just one good trade. Not saying there's not going to be multiple setups in a day, right? And multiple good setups in a day, but I wish I would have just been happier with this. And it's been worse in the past where I've come back to my computer after lunch and tried to force something and really lost all my profits for the day. And I'm glad I did not do that. But the only reason I did that was because I had good trades earlier in the day. And instead of it being 100 and change for the day, it was 70 and change for the day. And here's a kind of a look at the SPY chart, and here's the plays that I made. I had long calls from earlier in the year that are just getting punched in the face. So that kind of knocked it down. But yeah, the first one, guys, 71.88. I have no problem showing you numbers. This is a small portfolio. This portfolio right now is $5,400 in it. But $71 here, I got another 27, and I gave back 43. With the 58% I lost on my long calls, that I'm probably going to hold till about 7 days till expiration and then just take my loss. I realized about $56 on the day. But this first put, I just want to show you, like, if you did have the balls of steel. Here's the option contract. I'll delete this because I was looking at it before. So if you were to enter at 9:30, I got in at 9:40. So if you were to enter here at 9:40 and you were able to have the wherewithal to hold it for the entire day, you made 96% on this particular option. This was the 423 puts for March 11th. And if you were able to, this was the call that I took, that was a bad one. If you were able to get in when I did on this one, which was kind of even like middle of the day, if you were able to get in the middle of the day here and ride that to the end of the day, that was another 50% play that if I would have made a perfect trade, I could have made. So it's kind of why I like trading options. There is more volatility up and down, but these are some of the potential gains you can have with really, really good setups. So, you know, I hope that helps, guys, and I hope you kind of like understand what I'm doing here. There is a very, very big difference. As somebody that knocked day trading for a very long time, I see the difference between this being gambling and this being trading. I'm really starting to understand it, and hopefully all the people that hated out there and gave me flack on the main channel for trying to learn this and give it its due diligence, I hope you just look at this with an open mind and understand, you know, why I'm trying to learn this stuff, and it's a really, really fun hobby, and I'm really understanding the markets better. And I'm really, really looking forward to seeing what happens out of demand tomorrow, guys. Hope it helps. If it did, this is a new channel. Please subscribe, give the video a thumbs up, and I'll catch you on tomorrow's video.